Matt from InvestiQuant. Today is Thursday, July 30th, 2020, and yesterday was the day of the FOMC announcement. We ended up getting the announcement yesterday afternoon and had a positive reaction to it after what was already a very positive day that was developing, and ended up closing right up on the highs. So a strong day on FOMC announcement day. And this morning, we have seen some selling in the overnight session. We have pushed back down towards yesterday's low, giving up the majority of yesterday's gains and are starting to bounce a little bit here. So what I want to do today is look at what has happened historically when you get a sizable down gap the day after the FOMC announcement. So I'm going to set that up here in Discover. We will look at all four instruments. The setup is going to be entering long at the open, 9:30 a.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. The opening gap that I'm going to define here, we can do it all kinds of different ways within Discover, but I'm going to use a gap size as a percent of the 5-day ATR. I'm going to say it has to be at least 50% of the 5-day ATR. So you're getting a gap down of at least half the current volatility that we're seeing. So let me type that in here as 50%. That value for the ES today is about 19.5 points. So a gap down of about 19.5 points would be 50% of the 5-day ATR. And that should put it somewhere around 32, 33-ish, somewhere in that ballpark. Next, I'm going to go into indicators, say that we're above a 200-day moving average. I'm just going to use that because this is going to be something that doesn't have a ton of samples since it's a large down gap happening on the day after the FOMC announcement. So lastly, let me just add that day after the FOMC announcement and hit view results. And here we go. So these are the results of going long at 9:30 a.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, the day after the FOMC announcement, when you are getting a sizable down gap. And again, I'm defining that sizable down gap as a gap down of at least 50% of the average true range for the past 5 days. So that again, today in the ES is about 19.5 points or so, somewhere in that ballpark. And then lastly, above a 200-day moving average. Now, historically, this has been a pretty rare pattern. This has data going back to 2003. And in the ES, it has only happened 16 times. The NASDAQ has happened 9 times, 16 times in the YM, 10 times in the Russell. So we don't have very many samples to look at here. But when it has happened, the times it has been a little bit weaker that day. So ES, 38% win rate, so 38% of those have closed above the open. NASDAQ, 45%, YM same as the ES, 38%, and Russell, 30%. But all of these coming in under 50%, in fact, all under 45%, some of those even weaker than 40%. So as a group, this has historically been a little bit more bearish, but keep in mind, this is a very small sample size. And also, this is not looking at any context around the price action that happened yesterday. It just gets pretty rare when you start adding that kind of stuff, but you can dig into those types of studies as well. You can add that additional context of a really strong close that's gapping down after FOMC announcement by just adding a price pattern to it if you would like to. So that's available in the price pattern section. You know, maybe you could use a close in the top 25% of the range or something like that to capture the idea of yesterday. But hopefully you found that interesting. Good luck, and we will see you next time.